Hey everyone! Welcome back to Finance Flicks Hub, your go-to place for market insights, stock analysis, and smart investing strategies. I'm glad you're here today because we're about to dig into what's really going on in the markets right now, why you're seeing more volatility, what that means, and which stocks might be positioning for the next move. By the time we're done, you'll have a sharper view of the new market, normal and actionable ideas you can evaluate for your portfolio. 2. Market overview. Current conditions. Markets are on edge right now. U.S. stocks opened the week with hesitant trading, reflecting investor uncertainty and risk sentiment that's firmly in wait-and-see mode. The tech-heavy Nasdaq composite is already down more than 3.5% in November as part of a broad retreat from recent highs. Why volatility is rising? Uncertainty around a December rate cut. Market expectations for whether the Federal Reserve will cut rates in December have fallen. Weakening bullish conviction. Data gaps from recent government shutdowns. Missing economic releases have left investors flying blind, which increases short-term anxiety. High valuations with little respite. Many large companies had elevated valuations, riding growth, optimism. Now correction pressure is building. Missed seasonal correction. Historically, September and early fall gives some pullback. This year that pattern didn't fully materialize, so some investors feel we're overdue. Impact of interest rates. Rate cuts typically lift valuations significantly. Even moderate earnings growth can lead to outsized stock gains if discounting becomes more generous. When rate cuts get delayed or hints of higher for longer rates dominate, valuations compress and stocks get sold down. Unlike the sharp rate hike-driven drawdowns of 2022, the current environment suggests eventual easing is still in the cards, meaning pullbacks today may offer buying opportunities for the long term. New market normal. Expect more frequent, sharper pullbacks in the years ahead. Volatility isn't an aberration, it's part of how the market works in this regime. The key is to treat the dips and range-bound periods not as threats, but as opportunities. Strategic investors will position accordingly. The volatility index VIX has moved higher, signaling that fear is creeping in. Technical support levels in major indexes are being tested. For example, the S&P and Nasdaq are hovering near their 50-day moving averages. The market pullback is being seen by some analysts, not as a bursting bubble, but rather a healthy reset after a sustained advance. With tech stocks under pressure, there's increasing talk of leadership broadening into value, cyclicals, and smaller caps. 3. Top stock opportunities. Stock 4, Chipotle Mexican Grill, CMG overview. Premium fast casual restaurant chain with 3,500 plus locations. Strengths: strong brand, pricing power, leading digital and delivery capabilities, no franchise model, which helps maintain control. Growth drivers: branded Chipotle Lanes drive-through pickup innovation, international expansion, digital loyalty program growth. Investment case: the pullback gives a rare chance to enter a high-quality business at a more attractive price. Same-store sales remain robust, margins expanding, and store openings continue approximately 150-200 per year. Catalysts: new stores domestically plus internationally, menu innovations, digital growth, buybacks, portfolio role, a quality growth company with less exposure, good diversification away from pure tech risk. Stock 3, Apply, digital APLD overview, data center, AI infrastructure play, market movement, recently hit by sell-off. People dumping high beta growth names, yet long-term fundamentals still point to growth. Investment case: strong upside if AI infrastructure demand continues. Hyperscalers lease contracts for compute. Capacity: lower cost power, cooling advantage. Macro tailwinds: AI spending is still in early innings. Asterisk C+302 OMPA NIs are paying premiums for capacity rather than building from scratch. Risk reward: more speculative than Chipotle but offers potentially higher upside for those willing to tolerate more volatility. Stock 2, Regetti Computing RGTI overview, quantum computing company, part of emerging AI arms race infrastructure. Market cycle: speculative space, currently in a so what now phase among investors, high uncertainty but high potential. Investment case: if quantum infrastructure becomes critical, RGTI stands to benefit. The risk is high, but so is the reward potential for the patient investor. Macro tailwinds: AI and quantum investment from both private and public sectors. Market may undervalue early-stage infrastructure plays like this. Stock 1, The Trade Desk TTD overview. Leader in programmatic digital advertising, buys media across video, connected TV, mobile, open internet. Current valuation: trading at notable discount, roughly 70% below recent all-time highs, and near long-term support levels. Catalysts: upcoming holiday advertising season, Black Friday. Cyber Week, Christmas, January clearance is expected to increase ad spend significantly. Business strengths, positioned at intersection of multiple growth trends, connected TV, retail media, open internet ads, programmatic automation. Investment case, strong business model, discounted valuation and meaningful upside if ad spend rebounds. Low downside relative to upside in my view. For conclusion, knowledgeable ending. So there you have it. We're in a market where volatility, uncertainty, and shifting leadership are the new normal. But that doesn't mean you're powerless. In fact, it means opportunity. The occasional pullback, the skipped seasonal correction, the rate cut uncertainty, all of it gives savvy investors entry points. The stocks we covered today, from Chipotle's quality growth to Applied Digital's infrastructure lever, Regetti's bold early-stage quantum play, and The Trade Desk's discounted premium business, offer a mix of stability, growth, and high upside possibilities. Remember, investing isn't just about catching the thrill of the next big run. It's about being prepared, disciplined, and opportunistic when the market gives you a chance. Stay patient, focus on fundamentals, and use volatility to your advantage. 5. Sign off, call to action. Thanks so much for watching. If you found this helpful, make sure you subscribe to Finance Flicks Hub so you don't miss our future market breakdowns and stock ideas. We'll keep bringing you the insights and analysis you need to make smarter investing decisions. See you in the next video.